Hello, and welcome to our next presentation. This is day 3 of the final day of the symposium. And on behalf of the MIT CDOIQ Virtual Symposium, we would like to thank all our sponsors who have sponsored the symposium this year. Please keep a lookout for a very special survey that we'll be sending out shortly. In the meantime, let me thank our sponsors, Deloitte, Informatica, Privacy Analytics, DAWIX, Fusion Alliance, KPMG, Santel Consultants, Tamer, Elation, Ali Data, Big ID, Boomi, Caserta, Citizen, Data Kitchen, Garage, Okira, Pylog, Click, ThoughtSpot, Eckerson, Global ID, Snowflake, and Starburst. Please take a chance to go to Content Hub, see what content they have, download that, and if you get a chance, reach out to our partners. Without our partners, we would not be able to hold a symposium. Thank you, and we look forward to seeing you in 2021.
All right, good afternoon, everybody. My name is Peter Aiken, and I'm your host for this panel that we're really looking forward to. I'm just going to turn it over to Lars Toomre, who is the CEO of BRC FinTech Corporation, and let him introduce his distinguished guests, who are both friends and colleagues. And we will take your questions at the Soley thing. So, Lars, I'll let you jump right in.
Thank you very much. Hopefully you can see the presentation we'll be using for as a base. It feels a little odd to be looking to the side here as I'm talking, but if there are any questions, please let me know. My name is Lars Toomre. I'm a 1982 MIT grad, mechanical engineering technically. I'm the head of something that MIT folks might know well, Brass Rats and Capital, or BRC FinTech as we refer to it as. I also am wearing a different hat here today as being a leader of several of the OMG standards groups, including the government DTF, the central bank digital currency working group, and something that we have in flight right now called the standard business report model working group, which is another standard coming from OMG. I'm going to ask Richard Soley, who's the CEO of OMG, to please introduce himself, and then I'll ask Rich Robinson from Bloomberg to do the same.
Good afternoon, everyone. My name is Richard Soley. I'm chairman and CEO of the Object Management Group, or OMG, as we named ourselves without knowing that it would soon be the best known teenage girl symbols. OMG also creates other consortia, so you might know us under other names, like the Consortium for Information and Software Quality, the Green Computing Impact Organization, the Cloud Council, the Industrial Internet Consortium, or the Digital Twin Consortium. We've been in financial standards now for over 20 years, and I think you're going to learn some interesting things today.
Thank you, Richard. Rich?
Sure, thanks, Lars. Hello to you both. Hello to everybody on the webinar. Welcome. I'm Rich Robinson. I work at Bloomberg currently. I have 30 years in the industry, 20 of those spent in standards of one fashion or another, mainly around data and messaging. I've worked in a number of different firms across the industry, so front, mid, back office, both on the ops and technology side. And I joined Bloomberg 5 years ago. I'm working mainly on open data initiatives, both within the industry and also within Bloomberg, and looking at how they benefit the industry as a public good overall. I will note that I'm a Carnegie Mellon grad as opposed to MIT, so Lars and I have to banter back and forth on that a bit. And I got my MBA at Stern in organizational
You're outnumbered, the two MIT grads to one Carnegie Mellon.
I knew you were MIT as well, Richard, but so we're off to a great start.
Hey, Rich, maybe you could spend a moment and sort of talk about what you mean by open and open symbology?
Sure. So even just open standards versus standards, right? So just because something's a standard doesn't mean that it's accessible for everybody to use. Most standards actually carry some level of licensing restriction on access, restrictions on use. There's some sort of rent attached to it. Open standards really came on the heels of open source and the great things that have happened in the open source community in the programming technology side. Dr. Soley, of course, knows well because the Object Management Group is one of the standards organizations you can point to, like W3C as well, that promote open standards. So that means that you can access the standard for free, you can use it, there's no restrictions on the use, and you're not paying licensing fees. It enables access across any kind of industry, because now even from an individual user to a large firm have equal access and equal rights to be able to use and participate in that standard. There are a couple different flavors of open as well. So there's things like the MIT open source license, which I actually like a lot, even though I'm Carnegie Mellon. That provides use without restrictions. So there's no commercial ties to anything. Another popular one is Creative Commons license, which is an open source standard. However, it does have a nuance that you can charge for commercial use of the standard. So even in open standards, there's some variability in there.
Great, thank you. Maybe Richard Soley, you could explain a little bit about the OMG process and how it differs, for instance, from ISO, and are the standards open and free, and perhaps address how we come up with a standard.
Sure. We've done this over 1,000 times in the last 30 years. We develop a standard through our task forces, which are specialized in particular vertical markets like finance or healthcare. And then through our to domain technical committee, technology committee, and then to the board of directors. So far, the board of directors has been a rubber stamp to the technology committees. It sounds very bureaucratic, and if you look at our rules, they look very bureaucratic, but it takes on average 17 months. That's if you look at the 1,000 standards processes we've been through in the last 30 years, they take on average 17 months. And you're going to hear some that took about 1.5 years. All of our specifications are completely open. You don't have to be a member to download them, to see them, to use them, to alter them. Although if you do alter them, you're not using the standard, of course. We support multiple different standards, open kinds of standards. I won't get into the details, except to say that you can tell on the first page of the specification.
Great, thank you.
Yeah, Lars, on the back of that, the interesting thing about contrasting standards organizations, and there's a lot of them out there, and there's a lot of standards out there. Just because there's a standards organization, it doesn't confer that openness on it, and that's sort of like the point we were trying to make before, I think. Organizations like ISO actually, some of their standards are open, but the majority are not, simply because the way that they fund themselves is through the licensing of those standards, and the people who manage those standards do so as well. Object Management Group is funded as a consortium, I can say, Dr. Soley.
Yeah, that's correct, by members.
Yeah, so it's all standards organizations have different approaches to how they gather members, the community that they're associated with, and that's something I think we'll talk a little later on, is where community comes into all of this, right? I think it was Tannenbaum said, the great thing about standards, there are so many. A lot of people use that in derision, but I actually think that's a great thing, because what people tend to forget is that standards doesn't mean that's an overarching solution. It's not a silver bullet. It's a solution for a specific community for a specific use. Doesn't necessarily mean that's going to be appropriate for a similar use. It may be, it may. People need to look at standards as it applies to a community and within that community and context.
Since you both mentioned ISO, I should mention something about the International Organization for Standards, which is what ISO stands for. We have a special relationship with ISO and have had for almost 30 years, a special relationship where OMG specifications become ISO standards, which is important because the World Trade Organization, WTO, requires use of ISO standards. But I think it's emblematic that if you want a copy of our standards, you can just come to the OMG website and download it without being a member. But if you want an ISO standard, even though it's exactly and precisely the same, use Swiss francs to get a copy.
Yeah, and the proliferation of standards is not necessarily a bad thing. To your point, I know BSI, British Standards Institute, I was just on their website today and took note that they have over 30,000 standards that they have published. They are also an ISO member through being a national body. So imagine those were all duplicated into the ISO form as well. But it just speaks to why standards are important for communities specifically, as opposed to, oh, it's a standard, I better use it. You better know what the application and the context of that standard is for.
To be fair, Rich, you're talking about the BSI or ISO textile weights, screw thread lengths, and all sorts of things, not just software.
Not just financial services. Yes, definitely. We get into the electrical standards and everything else, but we'll put that off to the side.
Let us turn the focus to financial services a bit. And I just want to go through a couple of things so to help set for further discussion. One is that financial services and what's now referred to as financial technology or FinTech is rapidly changing. If you read the literature or news reports, you'll see there's a reference quite often to something called the central bank digital currencies. A year ago at this time, the Federal Reserve of the United States didn't think we were going to have a digital dollar. Within the last 2 weeks, there's been an announcement that the Boston Federal Reserve Bank will be working with the Digital Currency Initiative at MIT to create what's referred to as a trial digital currency, and looking at some of the issues of how we're going to record those in wallets, a number of issues around that. It's anticipated to be a 2 to 3 year project. And based upon that learning, it's anticipated the United States will then have to go through a regulatory process and have various laws changed and addressing some issues around, can you record transactions just basically digitally in the UCC, Universal Commercial Code registers. So that's one thing which is dramatically going on. You'll hear, if you're talking about financial services, there's something else called the digital yuan, YUAN, which is the Chinese currency. It's now being tested in 4 regions of China, and it's scheduled to supposedly being rolled out in Hong Kong to be tested in the course of the next 6 to 8 weeks. That's rumor. I can't say it's fact, but there seems to be quite a bit of credibility with that coming.
Say, Lars, on that central bank digital currency note, especially since you brought up the ASEAN region, that has come up, not the Chinese currency specifically, but central bank digital currencies. It will have global impact. So that has come up at the ASEAN Business Advisory Council, the APEC Business Advisory Council, ABAC. They are looking at financial market infrastructure impacts of the central bank digital currencies globally, especially pertaining to the ASEAN region and what it may.
Nevertheless, be fair, not all central bank online currencies are going to be successful. For example, the Venezuelan Bolivar probably will not.
I agree with both of you on that.
But it has an impact to the access to financial markets, especially for disadvantaged and unbanked and that kind of community as well. So it looks pretty interesting topic coming out.
It's certainly an interesting topic. Just to elaborate just a little bit further, the lead on the central bank digital currencies is being taken by the Bank for International Settlements, which is the central bank to the central banks. they have an innovation lab, which is working with the Federal Reserve of the United States, the Bank of England, Bank of Netherlands, the Swedish Central Bank, Singapore Central Bank, and Hong Kong Monetary Authority on a whole series of issues is, for instance, should you be able to convert freely between a digital currency and a cash currency? How are we going to deal with creation of additional currency? And that has some impact in terms of how you're going to finance things in COVID environments. And one of the other bigger issues, which is out there floating around, is currently banks sometimes get paid, sometimes pay for the reserves they hold with a central bank. How are we going to deal with payment of interest on currencies, digital currencies in particular? So there's a lot of interest in that area. OMG has formed another working group focusing just on that section of it. You're more than welcome to join us. At OMG, the RegTech type initiatives are handled in the Government Domain Task Force. So some of the things which we're dealing with in that task force are new laws, new regulations, new payment systems, and new technologies. And so for some of you who may not be aware of it, the Boston Fed is leading the efforts on the behalf of the Federal Reserve System of the United States to replace what's referred to as ACH, Automatic Clearinghouse. They're going to move it from being a 2-day process to being almost simultaneous. The intent is to try and get that done for 2023. Not sure they're going to get it done in time, but we'll see how it goes. Simultaneous with that, there's a lot of work going on with digital ledgers and blockchains, particularly in terms of government delivery of government services, both here in the United States, where there's talk about government assistance of various types being given out through coins or blockchains, reporting to the various states. There's a whole series of effort going on with knowledge graphs. Also, you will hear a lot about it, machine learning, and to some extent, artificial intelligence. In the financial sector, there are several other things which are slowly boiling up, and they have been for about 5 or 6 years now. One is the Open Data Act, which is an act that was enacted by Congress in 2014 that tries to consolidate on behalf of all the non-defense, non-intelligence side of the United States government where the money's been spent. And although it's been authorized, how has it actually been put to work? The Evidence-Based Policymaking Act was passed in late 2018. That's an act where they're trying to reach into more of the government's use and setting of goals based upon open data. Along those lines, within the last 6 months, OMG has set up a statistical working group working with several of the statistical agencies of the United States government, including Bureau of Labor Statistics and the Census Bureau, trying to address the issue of both how to also trying to help deal with the discovery issue, because it's very hard to find, for instance, all the information that's available on the economic performance of the Boston area. Is it the city of the Boston? Is it a metropolitan area? Along those things. Third area that there's a lot of activity going on right now is what's referred to as the GRADE Act, and that's the Grant Reporting Modernization Act. It applies to institutions like MIT. It applies to institutions like the Water District of Boston. It applies to loans that the city of Cambridge might get, both from various federal agencies, also from the housing agencies. And then the fourth of these Open Data Act laws has been proposed as HR 4476. It's known as the Financial Transparency Act. It is likely to be taken up for markup in October and potentially for passage after the November election. And what's significant about this act is it's in some sense the modernization of financial federal regulation, in the sense that it's going to require that all reports financial regulators receive from regulated entities and all reports they produce back out must be in both current format and something that's referred to as machine readable format. And that's going to have a significant impact on all the regulatory agencies. The financial sector tends to lead, but we'd expect this to also hit, for instance, Department of Transportation, Department of Commerce in due course.
You should point out, Lars, that that data is in some sort of computer format before it's turned into a flat format that is currently distributed. Nobody creates a spreadsheet without using a spreadsheet software.
Correct.
It's absolutely amazing that you have to turn it back into something in electronic form after it's been after it's been output into a platform.
Yep. Richard, I was going to ask you if you'd spend a moment talking about some of these popular OMG standards, and then I'm going to ask Rich if you can deal with, since you're so familiar with Figgy. Richard, would you start?
Sure, I'm happy to. OMG was created to create standards in distributed objects first. And we did the Corpus standard in 1990, 30 years ago, when I was but a babe. Stop laughing. We moved into modeling languages within about 5 years, and we standardized the UML. So if you've heard of the Uniform Modeling Language, or UML, that's actually from us, as well as the system modeling language, which is based on UML, called SysML. Those are both examples of languages that fall under our model-driven architecture, a way to take a description of a system in UML or SysML and convert it into a running system. You can actually use FUML, executable UML, to create a system which is executable all the way down from the description of the system. But our background in middleware continued not only with Corba, but with DDS, the Data Distribution Service. And our modeling languages include the language that was created by the Business Process Modeling Initiative, which was merged into OMG years ago, and is now called the Business Process Model and Notation. These are just 5 of the several hundred standards that we've developed over the last 30 years, but I'm not going to spend a lot of time. I guess Rich is going to talk about some of the specific financial standards.
To give you a sense of the commonness of Corba, in your typical smartphone, there are more than 15 OMG standards hidden within that device. So it's how you communicate with networks is all part of that whole Corba architecture, also quite a bit from DDS.
Last time we looked, which is about 10 years ago, there were about 5 billion copies of Corba running. But nobody knows because it's free, anyone can use it, and you don't have to pay anything to anyone in order to use it.
Great. Rich, could you maybe start talking a little bit about Figgy?
Sure. So Figgy, just a pause, I saw in our little chat that no questions so far, but where the group is open to questions on Slido, right? So just so that's out there if people want to ask questions. So Figgy, Financial Instrument Global Identifier, is one of the standards underneath the Object Management Group. It was created a little over 10 years ago within Bloomberg originally to solve some internal data modeling issues around financial instruments. And the feedback from clients as well as others was very positive. And when it was first developed, one of the principles attached to this was that it was good as open data in the first place. I know some folks may find that hard to believe coming from a data vendor that sells data, but the view on Figgy, which is a semantically meaningless identifier described by a set of metadata. So it's both the identifier, primary key, as well as the metadata that describes it. The view is it is just descriptive information. It lets us talk about something with each other that everybody deals with and everybody should know about, and it doesn't have any true value add on it other than us being able to communicate openly. We went to the object management group to actually go through the rigor that the experts there in have to ensure that the standard was well formed. That went through process as Richard described earlier. I think it was 18 months or so until it was accepted as a standard and then later on approved within the object management group's process. It's available for the public good on openfiggy.com, as well as, so you don't have to be a Bloomberg user. You can be anybody, individual. You don't have to register for it. We don't track usage. We have a RESTful API that people can use as well that also doesn't require any kind of payment or registration. And really the goal is to allow folks to talk about the hundreds of different identifiers already out there today and create a relationship model to put them together. So you can use what you want, then map to something that is open and transparent, and that folks that may not have a license for your identifier have, at least you can translate and interact between those as well.
You don't actually say, but we probably should say that it's been, we don't track you, but we do know that it's been downloaded thousands of times.
Not just well, okay, the standard's been downloaded thousands of times. The actual API just last month had 8 billion hits. So the API has been requested. So 8 billion requests for Figgy
in a
users
month, correct?
in a month, and they're
It's
about
staggering numbers.
yes. So we have about I think it's 160 million financial instruments identified. The reason so many is because it includes matured and retired and no longer listed instruments, because the identifier is semantically meaningless. It doesn't change with any, it stays as a permanent case. So you can use it for lineage and everything else that you need that for. The other standard within the OMG chest in finance is the Financial Industry Business Ontology, so FIBO, trying to look at creating an ontology around terms and things that go on in financial services more generally. There's a lot of work on there, especially around how you approach context when an ontology itself should be within a single context, but there's multiple contexts and communities within financial services. So there's a lot of activity right now going on around how you create probably multiple ontologies to handle different contexts for specific communities. But another good standard to take a look at.
And to be fair, we should mention that FIBO was developed totally between OMG and the Electronic Data Management Council, or EDM Council.
Right, EDM Council. And then Lars, SBRM's, you've been running with that one, so I'll let you take the background on that.
Yeah, SBRM was a response to the need of the financial regulatory community, particularly something called FSOC, which is the Financial Stability Oversight Council, reports into the U.S. Department of Treasury Secretary. And it's the council in which all 9 or 10 of the American financial regulators and the municipal bond and also the insurance regulators, dotted line report into, of how you consolidate information and how we deal with potentially systemic risk. Each one of those regulators reports in different ways, and how you can begin to bring together or integrate those models is what Standard Business Report Model is attempting to standardize on. It allows computers to read reports much like a human would. And then much more importantly, it allows for one to attach the individual values or cell values, as one thinks of an Excel spreadsheet, to what I refer to as the semantic tree of knowledge, however you've defined that locally, so that one can attach total assets not just as a number or as a value, but also one can have it tagged saying, this is total assets of a financial institution. This is a balance, and it's therefore it ties in as a particular period in time and as particular currency that one is looking at that number. So one can differentiate very quickly between yen and dollars, or yen, dollars and euro, etc. So those are the two major things that are coming with the standard business report model. We anticipate that there'll be a submission in December, and depending upon how that submission is received, it will be approved then, or in next March is our hope. Things can change, but that's where we expect it to be.
Now, Lars, just staying on that for a second.
Sure.
Now, the important thing, going back and tying this back to the open standards discussion, right? When we're talking about this application within reporting for government, regulators, legislation, all that kind of thing. SBRM, if you use data and data standards that are not open, regardless of the openness of the format that you use, it means that the underlying data is not going to be accessible to everybody. So that brings in why it's important to use open data standards like FIGI and other open data standards as those data elements as well, because now that provides the accessibility and transparency for anybody to access it, even those that may not normally have access to that information. Just wanted to bring that point in.
Yeah, no, absolutely, very much. I was going to ask you, Rich, as we begin to talk about some of those challenges in the financial sector, can you explain a little bit of what LEI is versus FIGIs, and what's going on with that whole sense of the world? So
LEI came out of G20 Pittsburgh meeting, 2008, all that kind of stuff. Hopefully everybody online knows about it. Legal entity identifier. It is really meant to provide a identifier for this is a legal entity with some backing in that around documentation and whatnot, so that both people within the financial service industry, regulators, and legislators are able to identify where the obligations actually lie from a legal entity basis. Because a lot of the transactions that go on in financial services occur between branches and this subcompany and that subcompany, and you don't necessarily know who the actual legal entity that overarches all of that is. Within the context of our open data that we've been talking about, in U.S. government, in order to apply to be a provider to the U.S. government, you typically needed to get what was known as a DUNS number. That was owned by a firm, and in order to get the DUNS number, you had to pay for it, and then also to use the DUNS number, you had to pay for it. In order to put it in your database, you had to pay for it. To know what the DUNS number signified, because it didn't have any logic that you can figure out what it was, you had to pay for it, right? So immediately that's off. Yes, it funds the creation of the number and the maintenance, but really it just adds friction and it takes away transparency out of the system for folks that need to know what's going on. So the LEI is it's an ISO standard, but LEI itself is open for use. You can go to the GLIFE, or Bloomberg, full disclosure, is a local operating unit. We also issue LEIs on behalf of the GLIFE, along with dozens or more of other local operating units around the world. But you can go to any of those LOUs or the GLIFE directly and download the LEIs with the descriptive information, and that's open access and open free. You can transfer it, database it, and share it without restrictions. So that, I think, helps
I think you just mentioned that GLIPE stands for Global LEI Foundation,
Yes.
and I think puts a little bit of color on the story to point out that before LEI was created, you had things like the Lehman Brothers meltdown. They're still trying to figure out who were the parties to the contracts that Lehman left behind. With LEI, hopefully that will not be the case.
Still might be hard to create all the relationships, but at least you don't have to go somewhere else to figure out what the LEI actually stands for and pay for it. At least that data will be open and free, and it should be easier for us to decipher it and make those relationships. Absolutely.
Yeah. Corporate structure is going to be an issue we still have to address, and people take out a fair amount of money for describing corporate structure, but we'll see where that goes. Rich, could you possibly explain a little bit about what's going on with 13Fs and modernization and something about CUSIPs?
No, so again, a lot of regulation is, as we went through those four acts that are either already in or pending, talking about open data, use of open data, open standards. The SEC just recently had a consultation on 13F, which is a reporting requirement, tagged in at the end, interesting enough, which is question 25. And question 25 is somewhat unrelated to the actual substance of the rest of 13F, but it's very interesting because the SEC is actually asking for comment on if the industry would like to have alternatives to reporting financial instruments other than using the CUSIP, which is a US standard through X9, but it does carry licensing and restrictions on it. So just the SEC looking and saying, this is part of that evolution in public policy and regulators, I believe, in looking at open data and how are there different ways, or are there ways for them to create better transparency for the industry, both from, forget about large firms, because your large firms, they can pay the rent apparently, right? So people don't really concern themselves with those. But what about the individual? Individuals don't have access to this data if it's licensed, and by creating it and allowing open data to be used, this evens the playing field, so to speak, but also just makes it more transparent, reduces friction in the marketplace, actually pulls cost out of the marketplace as well, so it be put somewhere else.
I think it's worth pointing out that CUSIP, besides having licensing requirements, doesn't solve certain problems. It's difficult to tell that two CUSIPs, one refers to the underlying equity and one relies to the derivative based on the equity.
Yeah. Well, more importantly, CUSIPs also get reused, and you don't have a same base for, if you had more than 100 instruments tied to one equity, you'll have two different bases, quote unquote, because it can only have up to 100 securities of that type. So there's some difficulties with the old CUSIP system. But can I turn the conversation a little bit to UTIs and how we're going to identify in the want to talk a little bit about that, Rich, and what the work you've been doing with ISO?
Yeah, right before we get to that, I see Peter just posted a question.
Sorry.
This is LEI used in banks, and I would need access to such ID to classify source and destination of funds in account receivable, account payable functions. So this goes back to my point about what is the purpose of a standard and what community is it meant for filling. LEI is not ubiquitous across the globe yet. It got a shot in the arm through ESMA's mandated regulation in, was it 2018, where LEI became mandatory for reporting in MiFID II. There are, I think, and I don't want to quote, I want to say 2 million LEIs issued currently. I know someone from the GLIPE is going to get me wrong on that. probably a little bit more. But obviously, that's nowhere near the number of firms that exist in the world today. Probably a little bit less uptake in Asia, but again, the ABAC and ASEAN region is looking at how to better utilize LEI in various processes and get it a little bit more ubiquitous out there. The US, FTC and SEC are looking at policies around use of LEI for reporting and those kind of things. Now, again, just because there's a standard for identifying legal entity, it doesn't necessarily mean that if you need to identify entity, you should use LEI. It depends on the process that you're going to be performing. Say supply chain, LEI might not actually be the right thing because in supply chain, you need to find the location of warehouses, not necessarily the legal entity's legal address. So understanding your use case, the community that you're working with, that will depend on if you actually need to have access to it and use it within your account receivables, account payable functions.
One of the proposals which is out there, it has not been adopted yet, but in implementing the GREAT Act, it has been proposed that LEIs be a requirement for every one of the grant recipients. It's currently at Office of Management Budget as a proposal, but it's not been, issued as part of the regulations. But it's estimated that if that came through, that would significantly drop the cost of LEIs and speed their adoption. We'll see what happens with that because some legal entities are not quite legal in the sense that, water districts are never quite formed. They're just a reference to how they got money for that area. So we'll take it from there. Richard, do you want to talk a little bit about transparency and privacy and some of the things that are coming up with AI and ability to identify people from other information?
Yeah, I think this is a good set of questions. There's a lot of questions in there, but it comes down to being able to correctly identify a person with the privacy requirements that are currently in place. And that's something that we do with Omg Standards today. And everyone has heard of the problems that are coming with machine learning today and the AI, artificial intelligence today. To agree with Scooter, the head of Sun, who said, "There's no such thing as privacy. Get over it."
Yeah.
Sorry to make you laugh.
No, I completely agree with you. I mean, what's very interesting as we move towards a digital currency type world is that there are conflicting requirements in the sense that you need to know your customer, particularly for when you're doing larger transactions. Let's define them maybe as above $10,000, certainly here in the US. But at the same time, you're supposed to preserve privacy of who you're doing transactions with. And
I think it's fair to point out, for example, that most blockchain solutions, using the term blockchain to mean digital ledgers in general, are not like cash. You can track down the network address of everyone involved in the transaction, and from the network address you can often track down the actual identity of that person.
But now when you're talking about multi-jurisdictional transactions, right? So that's where the rub comes in, because each jurisdiction has different rules around privacy, sharing of data, what data is allowed and what data is not. So that's one of the challenges globally is if I'm a global firm and I'm interacting with one particular client, right, who's also global, I'm going to have to do a KYC that's different in every single jurisdiction. And I won't be able to link all of those together because of different jurisdictional rules, regardless if I have the data there in different jurisdictions. I won't be able to pull that all together and see a global view of that client.
It's a big challenge, and we encourage people who are participating in this space to please come and join us and in the conversations with the various international regulators as well. On that note, maybe Rich, you could.
Before that, there's actually a question in the chat room.
Oh, I'm sorry, I don't have it set up.
Somebody asked, is there a European competition to LDI? And the answer is LDI is worldwide, thank God. Life is actually based in Switzerland.
Okay. I was going to ask Rich, maybe you want to talk a little bit about dialect when we talk about common understanding of data, because this is turning out to be a really bigger issue than many of us thought 5-6 years ago.
Yeah, so I mean, as you and I have talked about it, I've dove headfirst into the world of applied linguistics over the past few years, and this is where my talk about communities of practice and context has mainly come from. There's some recognition of semantics within machine learning, AI, and natural language processing and whatnot, but it's mainly focused on just trying to solve a specific problem. When we look at standards across the world, and then you look at the financial services industry, the financial services industry does not have a common language, nor should it, is my opinion, which goes against what a lot of global regulators and whatnot would like to happen. The reason that you can't have that is a linguistic problem, right? Within the financial services industry, you have multiple different communities. The latest thing I've been looking up is Hellenic systems. So actually today I was reading Ludman, so forgive me for digressing on some of this topic, but different communities are going to have different languages, just like, and they're formed by culture. So front office and back office have different languages, fixed income and equity have different languages. Trying to force them to have the same language is like trying to force Esperanto onto the world. It's not going to happen. Even if you do succeed through regulation, those individual groups, those communities that have their own cultures, they're going to start to diverge again. So you may win a little battle here, but then it's going to all become different again. And it's really what we should be focusing on is those dialect or languages specific to communities, creating standards within those, and then managing at the intersection points. So where front office and back office come together. How do you translate between those two as opposed to trying to force them to talk the same? When you mentioned dialect, what American language and the difference between Queen's English and American, and how American was derided as its own dialect, but is a different language, right? So there's different understandings. There's certain things in French you can say that you can't really understand. It doesn't translate exactly into English, right? So you have that in all languages, and you have that in financial services languages as well. One of the examples the dean of Carnegie Mellon's linguistic department gave me was, think about doctors, right? So you figure all doctors talk doctor language. But if you have a room full of oncologists talking and you have a pediatrician walk into the room, it is highly likely that they will not understand anything that they're saying because they're using their own slang, their own oncologist-specific language. So I relate that back to financial services in the same sort of allegory. Is that
Yes,
to go with that, I was in a room with 10 CIOs from large money center banks, and they couldn't agree on how many legs a swap has. One answer was 2 legs, which is what I expected. One answer was 3 legs. One answer was any number of legs. So,
even better, I was in a room for ISO discussion actually with front office derivative traders and back office derivatives operations folks, and they were arguing for 45 minutes over what a price was. That what was important. Operations said it was price. No, the traders said it was price. Operations said it was the fixed rate. Well, after 45 minutes, I'm not a derivatives person, or I wasn't, and I turn around and go, so wait, price at a fixed rate, and that's what you send to operations. They were talking about the same thing.
I think the worst specific language is the legal language. And that brings up the last point on your slide, Lars.
Yes.
Move to algorithmic regulation. Existing regulation, even when it's algorithmic, is specified in legal language. It's contorted legal language on top of it. Maybe you can talk more about that.
Well, algorithmic regulation is going to be very interesting in the sense that, and maybe you can spend a moment talking about the fallacy of machine learning and AI, particularly since your PhD, I believe, is in one of those areas. Do you want to spend a moment talking about that, and I'll sort of talk about how algorithmic regulation can drift?
My PhD is actually in data flow processing, so we're not going to talk too much about machine learning, except to say it's very easy to fool a machine learning system. This is something that people don't like to talk about. There are two basic problems. Number one, it's very easy to fool by putting something that shouldn't be learned into the machine learning system. And second, machine learning systems, like neural nets before them, can't tell you why they decided what they decided, which is why DARPA is spending millions of dollars trying to solve the problem with what they call explainable AI.
Yep.
So Lars, a question
ahead,
came up real quick. Said, I think should we develop global government data standards so that data standards can evolve to one standard that can fit regulatory data from many countries? I would say no. Again, I would say we should develop. We have to turn standards development on its head. The way it works today is not working. Everybody wants to create the silver bullet, one standard that solves everything. A quote I've been, something I've been putting out there is silver bullets kill werewolves, but they don't kill vampires. You need stakes to kill them. Have a solution to a similar problem doesn't mean that you can use the same solution, right? So by developing standards for communities, then regulators can look at those specific communities, how they interact, and then look at what standards are applicable for what the regulator needs, as opposed to this top-down forced approach of everybody talk the same.
Right. I would use an example.
The next question was about innovation and standards. I have to mention standards are the greatest force for innovation in the world today. And proof of that is the internet itself. There's a standard way that internet networks connect to each other. And plus on top of that, an amazing number of protocols have been built on top of it.
Yeah, and to another point that came up, 2,000 terms and 6,000 to 8,000 meanings from David Eddy. So we go to ISO 20022. ISO 20022 is a dictionary. It is not a standard solution. It's a dictionary of terms. If I spelt the word LEAD and asked you to say it to me, some of you will say lead, some will say lead, which immediately has I think 56 different definitions. So the context is important, multiple meanings, and that's why we need to approach standards differently. FIBO is a good first start looking at ontologies and semantics, but we need more than that right now.
And as we go towards algorithmic regulation, this is an effort afoot. We're seeing it coming out of various housing finance and other types of regulations like that, where right now it's very prescriptive. One must do this, one cannot do that. And algorithmic regulation is saying this is what the goal of the regulation. We don't want to have discrimination in lending. So create a model, an algorithmic model that can help identify, quote unquote, when we're having a problem. There's too much danger, at least in my mind right now, of those algorithmic models drifting, getting incorrect information, so that you might create inadvertent redlining or inadvertent adverse selection of deciding whether credit card application is appropriate, like we saw with the Marcus in the last year. Two same people, one male, one female, presented the same information. It approved one, it didn't approve the other. is that really gender discrimination, or is it not? Can you prove, quote unquote, one way or the other? I'm worried about the time, so let's just get to, I'm sorry.
And Lars, hopefully the questions we haven't gotten to will get
Sure, please go ahead.
to us. Well, if we haven't answered them, hopefully we'll be able to take them back and somehow get them out posted somewhere.
Okay, for some reason I'm missing the last page of my slide deck. I don't understand why, but it's not there.
But there is a question there, how might standards, because of CDO conference, how might standards reduce the spend by CDOs on responding to regulatory reporting requirements? Mainly, in my view, open standards will definitely reduce the spend because one, it will the rent and friction of licensing and whatnot, but also the ability to share now, as opposed to all this mapping that goes on. You're speaking this, I'm speaking that. So maintaining all of that becomes so much easier, and the data quality goes up, so your errors go down. The questions that have to go back and forth amongst different firms and the regulators and the firms on the reports it just reduces, and that all drives down the cost of actually doing all this work.
Richard, did you have anything you wanted to add?
I think Rich said it right. These are data models that are built in, that are already built. You don't have to build them. The CDO doesn't have to design them, doesn't have to worry about the quality of them, because they're guaranteed not only for that company, but for interchange between that company and other companies.
And if they're open, just more companies using it and more firms using it, more individuals using it, increases the quality of it, right? And if it's an open participation model, then it becomes a self-sustaining system and a self-sustaining public good that everybody shares in.
Maybe I could ask one of you to answer the question, because I see independently a question. Where do you see us on the transition from vocabularies to taxonomies to ontologies to knowledge management? Where's your sense of where we are in the financial industry at the moment?
We're still crawling.
Unfortunately, you've asked a question that's probably an hour to answer, but the quick answer is what Rich said. We're still crawling.
Yeah.
I'm actually I'm working on a tome to exactly that point on how do we address this kind of thing. But I think Peter was trying to get
advantage of my position as moderator here and ask a question of my own. Richard, you just gave a total perfect answer to the question of how do we, why do these things save? And Rich, you were telling how to use by adopting opening standards. I believe that the problem we have here, and I want to get your reaction, is that most people outside of the group that we're talking to here have no idea what we just described. So how do we increase the literacy of the decision makers involved in this process is something that I'm very, very concerned about.
That's one of the huge challenges. Standards is very esoteric. It's run by a very small community of depending on the standards organization. Sometimes it's not a very diverse group of folks. I run into the same people across maybe like 8 different standards organizations I belong to, and the lack of diversity of mind share is poor. But
that said, outreach is extremely important. So panels such as this, Open Figgy, which Rich talked about earlier, there are places on the web and places in reality that you can find out lots of information about these models and not have to create them yourself.
Yeah, the education is the important part. So having open standards organizations that provide a lot of that information for free, it's a lot to take in. It's a lot of hard work, but companies need to dedicate people within their firms to do this work and share it within their firms and adopt that within their firms, as well as spread it amongst the parties that they interact with.
100% agree, of course. Lars, what a wonderful discussion that you've had here. I'm just going to take one more check to make sure we haven't got any more. Somebody said crawl, still trying to learn to roll over. think we got most of them. Maybe one or two questions we didn't get. We'll see if we can get them to you all. But I want to thank you for doing this. Lars, do you want to any concluding remarks at this point at the top of the hour?
No, I was going to say my only comment would be get involved. This is a high leverage payoff for helping to get the standardization done. It helps organizations, and it dramatically, I mean, really, really dramatically improves productivity in the long run. So, you know, there is pain of going through and doing it initially, but the productivity gains longer term are just enormous, as Richard Soley mentioned earlier in the talk.
I'm going to add one more piece to the takeaways for this meeting. I've been watching, of course, your activity for 30 years, but I truly had no idea of the astounding productivity that you have managed to pull together. Would just relative to other standards processes that you've kind of got this one down. I think that in itself has to become a good news story that most people aren't aware of, because as you said, there's sort of this persistent picture of what standards is about and how you participate in the process.
We've been doing it for more than 30 years, and we've been doing financial standards for more than 20 years. Says something by itself.
Absolutely. Absolutely. Well, everybody, thank you again for terrific content. We've got lots of people commenting on it and said lots to follow up on. Great session. So thank you again for your time, for sharing with us, and we hope to see you soon at a new event. Another event sometime coming up.
Thank you for the opportunity.
Yes, thanks for having me.
Thank you.
Pleasure to see everybody.